Welcome back to Investing Talk podcast. Today we're focusing our attention on a company that's seen, well, some truly wild volatility recently, Dragonfly Energy Holdings Corp. We've looked through the source materials you sent us, the research notes, analyst reports, recent news filings, and we're going to try and distill all that down to answer the big question everyone's asking about the stock. Is Dragonfly Energy a good time to buy now? And hey, thanks for sharing those sources with us. Really helpful. If you want us to look into a specific company, just leave a comment below after we get started here. And of course, please subscribe, like, and comment. It really helps support the show.
Yeah, this one is fascinating. The data, it really presents a classic battle, almost textbook. You've got this intense short-term financial panic. The market's terrified of dilution, but that's clashing directly with this huge long-term technological promise, that contrast, that immediate pain versus potential future gain. It makes it a really compelling case study for any investor.
Okay, let's unpack this then. The first thing that just jumps out from the sources is that massive pressure on the share price. Past 3 months, to put it mildly, the stock got hammered. What exactly caused such a dramatic drop?
Well, the primary driver, no question, was aggressive capital raising. And that led straight to massive share dilution. You really have to look at the timeline. In October 2025, that's what spooked the market. On October 6, Dragonfly launched a pretty large public offering, 20 million shares at $1.25 per share.
Right, 20 million shares. That's a significant chunk hitting the market, especially when things are already sensitive.
It is. And here's where the panic really ramped up.
Right.
Just 10 days later, October 16th, the company announced another major offering. This one was for $55.4 million. Common stock and pre-funded warrants. Doing those two massive capital raises like back-to-back, it sent a very clear and frankly alarming signal. They needed cash now. And the market reacted violently. People interpreted these moves as a sign of, critical financial instability. Triggered that huge sell-off based on dilution fears.
But waiting until they were apparently desperate enough to do 2 rounds back-to-back like that, doesn't that suggest maybe some serious financial mismanagement? Regardless of needing the funds, why didn't they sort this out earlier or maybe more smoothly?
That's a really fair point, and it's a valid concern about management. Absolutely. However, if you look at the bigger picture here, analysts had actually been pretty vocal for months about Dragonfly needing more funding. It wasn't exactly a secret. They operate in a highly capital-intensive sector. They're burning cash, aggressively scaling operations, developing cutting-edge tech. That costs money, a lot of it. So the funding announcements, they were brutal in timing and scale, but they did address a known necessary requirement. You keep the lights on, keep the R&D labs funded.
Okay, and while all this was going down, the rumor mill was just churning, right? We saw talk about the company possibly being acquired at a fire sale price. Any truth there?
Yeah, those acquisition rumors definitely swirled around like crazy during the plunge. But management specifically and publicly denied them. They were very clear. They said the volatility was squarely down to the capital raising, the dilution fears, not buyout talks.
Okay, right. Now here's where it gets really interesting for me. Despite all that bad news on the capital front, your sources show some really encouraging fundamental data coming out around the same time. What's the biggest positive surprise in the financials? The thing that kind of helps offset this dilution fear?
That surprise, comes from sales momentum. The preliminary Q3 2025 sales data, it shows a massive jump, 26% sequentially, hitting $16 million. And that significantly beat their prior guidance. That's why it's a positive surprise.
Wow, okay. 26% sequential jump. That could be a real turning point, couldn't it? That feels like a crucial sign of operational health, especially given where they were.
Absolutely. Remember, 2024 revenue, which was $50.65 million, that was actually down 21.35% year over year. So this Q3 surge, it marks a possible, maybe crucial inflection point in growth. Now, got to balance that, of course. The negative is that net losses increased sharply to minus $40.62 million in 2024. But that number reflects that intense, aggressive investment they're pouring into R&D and scaling up. That cash loss isn't necessarily failure. It's the cost of trying to win the technology race in this space.
Right. So that recent $55.4 million offering, the one that caused all that short-term pain, it was basically vital fuel for that expensive R&D engine. It boosts their balance sheet liquidity, signals some resilience, gives them the runway they need to keep developing products without, facing immediate insolvency.
Exactly right. And this brings us to the core of the long-term story, the competitive advantage, the why, if you will. Dragonfly Energy is already a recognized leader in deep-cycle lithium-ion storage batteries. They really dominate specific high-end markets, RVs, marine, off-grid, solar.
But it's their tech that's the real moat, isn't it? Let's talk about that all-solid-state battery technology. What exactly is that, and why does it matter so much for those RV and marine customers?
Oh, it's potentially groundbreaking stuff. A solid-state battery basically uses a solid electrolyte instead of the liquid or gel you find in traditional lithium-ion batteries. That switch, that simple change, makes them way safer, non-flammable, and much lighter, while actually holding more energy, higher density. Now think about their target market. RV users, boat enthusiasts, this could be transformative. Solid state means dramatically lighter batteries. That directly helps fuel efficiency handling for things that move. Plus, they're safer, potentially charge faster. This proprietary tech, and they just got to keep at and win reinforcing it, it strengthens their ability to innovate and really build a defensible lead in the next generation of power for that high-end mobility sector.
Okay, so the market's always forward-looking. It almost seems like investors have decided that dilution pain is maybe a sunk cost, the price of admission for this tech upside. What are the key milestones coming up, the things that could really shift the narrative back towards confidence in the next few months?
Yeah, there are several immediate critical catalysts on the calendar. First, keep a close eye on October 30th, 2025. That's the Q3 2025 earnings release. Analysts will be digging into that $16 million revenue number. They'll look deep at cash burn, order backlog, margins. Got to make sure they're not just selling product without making decent profit. Then, mid-November is also pretty key. November 15th, that's the U.S. ETF quarterly rebalancing.
Wait, could you just clarify that? ETF rebalancing sounds a bit like technical Wall Street jargon. What does it actually mean for the stock price?
Sure thing. So this is when major institutional funds, exchange-traded funds, they review all their holdings. They check if the stocks still meet the fund's rules, things like market cap or liquidity. And this review often triggers huge automated buying or selling. If Dragonfly gets included or gets a bigger weighting in a major ETF, well, that acts like a big institutional vote of confidence, often causes a significant stock spike. And the opposite is true, too, of course.
Got it. That makes sense. A potential institutional thumbs up or thumbs down. And right after that, we've got holiday spending indicators.
Exactly. November 27th brings the Thanksgiving holiday sales report. That gives crucial insight into demand for their high-end energy storage products. Those are often discretionary purchases tied to RVs, outdoor lifestyles. Looking into next year, January 30th, 2026, that's when they give their Q4 2025 earnings guidance and the Q1 2026 outlook. That'll set expectations for the whole new fiscal year.
Okay. What about the more speculative stuff, the rumors that could really move the needle short term?
Well, there's definitely persistent buzz about a potential strategic partnership announcement. Given that patented solid-state tech, speculation centers on maybe a major auto company, or perhaps a renewable energy grid firm wanting to license or co-develop it. Also, because of those recent dilution events, short interest is really high right now. So if some unexpected positive news drops like a huge order or that partnership, it creates a very high short squeeze risk. That means short sellers scramble to buy back shares to cover their bets, causing rapid, sometimes explosive upward pressure on the price. And yeah, M&A and takeover rumors, they're still hanging around among some investors who just think this tech platform is way undervalued at the current market cap.
Right. So if the fundamentals seem to be improving, the tech is protected, catalysts are potentially lining up, what does the technical view, the stock chart, tell us?
Well, the technical analysis right now is overwhelmingly bullish, which suggests the market has pretty definitively priced in that dilution fear. The charts are basically screaming reversal. The stock has bounced back sharply from that 52-week low of just 15 cents to recent highs near $1.97.
Wow, that's more than a tenfold gain off the bottom. That's huge.
It is huge. And the momentum indicators back this up. All the major ones, short-term, long-term moving averages, they've all flipped bullish, signaling buy. Technical models. They're forecasting a bullish trading range over the next 3 months. Resistance is right around that $1.97 level, with potential upside maybe stretching towards $2.96.
Yeah.
And the current analyst consensus, it's a strong buy rating with an average price target of $1.50. So even cautious analysts see significant room to move up from that recent floor.
Okay, let's bring it back to the big picture for you, the listener. Considering that really painful dilution risk that just happened versus that big 26% sales jump and that technological lead they seem to have with the patented solid-state batteries, what's the final takeaway here?
Our analysis points towards an overall bullish rating, maybe in 8 out of 10. The recent cash infusion, combined with that strong Q3 sales surge and the tech breakthroughs like the solid-state battery IP, it seems to position the company for a potentially rapid operational turnaround. Maybe even expansion into higher margin products. That cash injection. It was ugly, yes, but probably necessary medicine. However, and this is important, the risks are very real. You have to acknowledge them. There's ongoing execution risk. Can they actually efficiently turn all that R&D spending into scalable profit? That's the question. And the battery tech market is fiercely competitive, intensely capital intensive. They might have a lead now, but they absolutely have to keep running hard.
That's a great synthesis. So it sounds like this stock could be attractive for, well, both short-term traders maybe looking to play the Q3 results and that speculative buzz, and also, crucially, for long-term investors betting on that huge secular shift towards clean energy storage and next-gen batteries. So Dragonfly Energy's path forward seems to hinge entirely on one thing. Can management effectively use that fresh capital to speed up commercialization of that patented solid-state battery tech? If they pull it off, that solid-state tech could unlock completely new revenue streams way beyond just RVs, maybe making them a key supplier to auto or grid storage sectors. Then the recent dilution just becomes, a footnote in the stock's history. But if they fail, well, that cash injection just delays the inevitable. So the question for you is, does that enormous potential upside justify weathering the storm of the short-term financial chaos?